Hey everyone, thanks for watching. Julio Pinedo here, the mortgage connoisseur. Just wanted to bring you a weekly update on our real estate and mortgage industry. Today I want to talk about interest rates, mortgage rates. As you guys may know, or seen on the news, rates have gone up slightly in the last couple of weeks. Good news is rates are still low, especially compared to, the last few years. So we're still at a low, all-time low when it comes to mortgage rates. Now, one of the things that as a consumer, when you're shopping around for a mortgage, is we all have this wrong assumption that the best rate is the best deal, and it's not. A lot of times it's not, because with the wrong strategy, that rate can cost you thousands of dollars in the long run. So whenever you're shopping around for a mortgage, there are four things that you want to take into effect or into effect before you decide to go with the lender. Number one, obviously the rate. Now, when you're comparing rates, it has to be there has to be a balance. And what I mean with that is when you're shopping around and you're asking the loan officer you're working with, you should be asking them, what is my interest rate at par? What does that mean to you? That means that what is my rate based on the factors that affect the interest rate, such as my credit score, type of property, how much am I putting down, the loan program, and the type of property that you're buying. Those are the main things that you want to ask. Those all take into effect the interest rate costs whenever you're shopping around. So you want to ask your loan officer, what is my par rate? So if they quote you at 3%, that means that is your rate based on your credit and whatever other criteria is on that day. Now, because they tell you a 3% rate, that doesn't mean they have a high rate. They may have 2.75 rate available, but with that will come a points, a cost. Now that will cost you money to get into that rate. So that's why you have to ask, what is my par rate? Based on that, then you can determine. That's the only real way you can compare apples to apples, as we say in our industry, when it comes to rate in between two lenders, because the par rate is where you need to be at. Number two is the lender fees. You want to compare, hey, what are your lender fees? Usually, all lenders, and this is across the board, we all charge a lender fee. And when it comes, when lender fees are processing and underwriting fee, I don't know if you want to call it paperwork, administration, whatever you may want to call it. Those are, the fees that we have to obviously incorporate into our people that that work behind the scenes with us as loan officers to get the loan approved. So whenever you're shopping around, compare that from lender to lender. Some lenders have cheaper costs when it comes to that, or some may not charge, some may charge. Just depending on the situation. But you want to be able to compare that. And again, that's apples to apples at that point. Number three is the service level. This is a very important thing because now in the industry, all lenders, because of everything going on between Corona and everybody, buying and refinancing, the level of service can cost you money. And what I mean with that is if you're purchasing a home, for example, and you have a 30-day contingency contract and you're using a online lender or a bank or someone that can't perform within those 30 days, your seller is not obligated to extend your contract, and you potentially can lose out on your earnest money, inspections, appraisal fees, all of those things. So you want to make sure when you're interviewing that, hey, what are your turn times? If I'm purchasing a home, can you perform within 30 days, 35 days, whatever time frame you need, or whatever time frame, obviously is on the contract. That's very important because that will cost you money. And the last but not least, the most important one that I take the most pride of is the advice piece. You need to make sure when you're shopping around, whoever you're working with has to be able to give you advice on multiple situations on a mortgage. It can't just be one because it's the best rate. When I work with clients, I always put 3 to 4 different scenarios to them to ensure they know and understand that just because this rate is lower and you're paying for this rate is a better situation in the long run, um, for you. It's all about aligning your goals to your financial situation. Spending $3,000-4,000 in points to get a 2.875 or 2.75% rate just because the rate looks good and the payment is lower doesn't mean in the long run it's going to be a cheap loan, because there's a break even point, and that's the type of stuff that I like to compare and I like to share with my clients for them to understand that the long term savings, the short term savings, the long term cost, the short term cost, that is what you really want to make sure, the experience, the advice that comes from your loan officers. Many times, when you're working with these online lenders or bank mortgage loan officers, they may not have the tools to be able to provide that to you. They get so much volume that it's almost like, a number. And I hate to say that, but that's what it is. So whenever you're shopping around, definitely look to know and ask the questions to know that whoever you're trying to work with can give you that piece of advice, because the rate isn't going to save you more than the advice will in the long run. Thank you for the opportunity to hearing this. Thank you for watching. And if you need anything, comment below, send me a message, or you can always call me at 321-626-5714. Thank you, and God bless. Take care.